Welcome to Behind the Business, the podcast where we dive deep into the stories, strategies, and trends shaping founder-led businesses. I'm your host, Evan Roberts, bringing you candid conversations with owners, sellers, and industry leaders driving growth and innovation. Whether you're in the trenches or watching the market, this is your front row seat to the world of M&A and beyond. All right, guys, welcome. We have a lot of good stuff to chat about today. Really excited to dive into it. I think the first thing that I want to ask you guys first is, what's driving the current market? Where are we at right now?
Yeah, Evan, I mean, the space feels like it hasn't felt in since 2022. We're seeing since June a significant increase in just activity in general around the car wash space. And I think there's several things driving it, right? I mean, I think when bonus depreciation passed, you know, why is that significant? It's big, first off, when the sponsor community, the private equity guys are buying car washes, typically they unload the real estate. And in this case, when they unload real estate, the investors buying them take advantage of that bonus depreciation, which improves the cap rate. So so bonus depreciation came into effect under Trump, and they just put it in place. And so it happened around, when was it? May. As soon as that happened, it made car wash buying for the investor community very attractive. So it lowered a cap rate, which meant the buying community came out and was able to get more aggressive because they had more buyers for the real estate. That was a big deal, and one of the drivers. I think a second driver is just there's a lot of dry powder that's been sitting on the sidelines, and this is general and for M&A in general, right? And so all of a sudden that money, realizing the economy is not going to crash, it's definitely stabilized. Market's doing well. They've got to deploy this cash. They've got to go out and put it to work, and they felt now's the time. And then I think just the third reason is when they look at they sort of took this reset in the space, and they felt that the car wash business as a whole was very stable. They didn't see anything that was overly concerning. They felt a very stable membership sticking around, and so now they're got both feet back in, and so and it comes all at once. So when you see these cycles of M&A cycles, they're typically not flat, right? They're typically a cycle that goes up and goes down, fairly aggressive. We are now in a cycle going up, and it's fairly aggressive.
Before this kind of ramp up, it felt like the car wash industry kind of took a pause there. Chris, do you maybe want to jump on that too and see that kind of transition from the pause to now this current state?
Yeah, there's definitely, I mean, as we go back to the heights of M&A activity in the car wash sector in 2022, we saw a cooling down in 2023 and 2024. And a lot of this is due to just, first and foremost, increased volatility in capital markets. Anytime you see cost of capital doubling in such short order, you're of course just going to see globally a pause in mergers and acquisition activity. And that's not specific to the car wash sector. Then you think about just the pure quantum of units being absorbed by a lot of these strategics and sponsors that were active in M&A. It took time to really kind of integrate and test the thesis and stabilize operations. So we definitely saw a little bit of a reset, and that manifested not just in deal activity, but also just valuation multiples in this sector and in this space. What we see now today, and leveraging some of the comments that Jeff just previously made, is that pause created a little bit of an opening for both strategics and sponsors. Right. So for the strategics that were disciplined and prudent with how they deployed capital in some of the early stages of consolidation in this sector, they saw an opportunity now as groups were slowing down and stabilizing operations and integrating their acquisitions to really expand unit count in a meaningful way. So definitely those strategics that have the operating muscle behind their business and their discipline and capital deployment, they're accelerating in a big way. On the sponsor side, to Jeff's comments on the membership model, the thesis in this space remains intact. And a lot of those sponsors that couldn't get their arms around multiples in 2022 believe in this sector, and they're jumping in big ways today. And it's really kind of not just the sector itself, but it's somewhat a byproduct necessity. There's some structural issues today in the private equity community, given how limited global M&A activity has been for the last 2 years. If we look back in 2023 and 2024, global M&A was just shy of about $7 trillion. And comparatively, in the preceding 2 years, global M&A was about $10 trillion. And if you were to look at the sponsors specifically, the sponsors have represented the last 2 years about 28% of global M&A volume. So why does that matter? Jeff mentioned that there's a lot of dry powder on the sideline, about $2.6 trillion of dry powder for that matter. So if you think about that, with limited M&A, bunch of capital sitting on the sidelines, one of the most important metrics for fund sponsors is distributions to paid in capital, right? How much cash are you returning to your investors relative to the capital that they've committed to your fund? If you are not deploying that capital, and if you're not active in entering the exit investments, those DPI metrics get skewed. So in a large way today, sponsors are highly motivated to put that money to work. And again, that thesis in the car wash sector remains as strong today as it ever has. So you're seeing that being a big driver and kind of resuming activity after what's been a pause the last 2 years.
One of the things we're also seeing is the size of the check that buyers want to write.
Yep.
We've seen a couple of years where credit markets were very, very tight. Access to cash capital for them to even make acquisitions was tight. Their sponsors are kind of taking a pause at even deploying more of this capital out there to market. And today it feels like 2022 again. We're seeing, we've got more deals, I would say, in that 50 to 200 million range than we've had in the last 2-3 years combined. All in a very short period of time. So we're saying again that in general the car wash community wanting to write bigger checks. So it should be exciting in a few, I would say next couple of years for good operators.
Yeah, and where does it, with this renewed and heightened cycle that we're in, how are you seeing these car washes performing?
Yeah, I think in terms of operations, I'd say generally speaking, there are still some great well-run chains in this sector here. Even with, we definitely have some challenge in the labor market, right? That's no surprise to anybody. I mean, just today, the Fed reduced rates, and a big reason as to why they were lowering rates, even if, the belief isn't that inflation has been fully tamed and we're not yet feeling the effects of tariffs. They've cut because the labor market's showing some structural weakness, and we're seeing, consumer sentiment data come through pretty poorly. And how that has translated in the car wash sector, there's been a lot of benchmarking reports for the last quarter now where single wash volume and retail volume is lower. That said, your membership model is offered a backdrop to stabilize, your cash profile of your business, and what other more discretionary businesses are really feeling the pain of consumers tightening the belts a little bit there. A good analog to the car wash sector is kind of the gym model, right? Memberships. So having that sticky recurring revenue to support your business has definitely been a big benefit to a lot of operators today as the consumer is showing some signs of weakness.
And I think, over the last, couple of years, I think in general, the whole industry's hyper-focused on operations. We're saying, whether it's the small operator to the large platforms, if you talk to people, there's a definite focus on operations. They realize now if they can't just build it and somebody will buy it, they've got to be performing. So the good news is we've got a lot of good performing assets out there. Operators are doing a good job, and they're going to be rewarded for it.
It's funny if the conversations have shifted, right, Jeff? Where usually the question we get 10 times out of 10 are where are multiples at today? And now folks are asking, what should I be paying in chemistry costs? Or how do I optimize my labor force? So definitely the focus has been less about just value, more how do I operate this store at a high degree of excellence?
The performance is there, size of the checks are bigger. You mentioned sticky membership revenue is there. Also, new technology is being implemented. Do you want to touch on how that's driving this market as well, and what we can kind of see moving forward in this industry?
Yeah, you're seeing some really just awesome innovation in this sector here. A lot of it's centered around different forms of, using AI to better your business. We are seeing a renaissance, and a lot of it's kind of centered around probably the most important aspect of the business, which is the point of sale, right? Because a lot of it is differentiating through customer experience. And how could you use AI and different forms of technology to enrich in that CX? Again, table stakes in this business is dry, clean, shiny car every single visit. But how you really differentiate a competitive market is around that customer experience. So we're seeing some really interesting technology in this space. A lot of it, again, is centered around enhancing that customer experience. I think that next wave of innovation that we're seeing here is going to now kind of get back to the car wash tunnel itself. You're seeing some interesting forms of technology and advancements being applied around the tunnel controller itself. And I think a lot of this is to prep for that next wave of equipment innovation that we may see, which could lead to different forms of robotics in a tunnel. So overall, I mean, yeah, it's exciting. We're kind of in this renaissance of AI here and technological advancements in the car wash sector.
The real big question too is, you talk about cycles, you talk about this, renewed interest in the space. What's next? What do you see down the road?
I think it's just, I mean, for the next couple of years, I mean, you're going to see there's a handful of players that are going to be aggressive in growing their platforms. So we're already seeing evidence of it. When you look at Tsunami now, entering and buying, the Take Five assets. They're not doing it to own 50 car washes. They're going to be a force. You look at the growth of Quick Quacks and the clubs of the world, L Car Wash of the world, Spotless. I mean, so I think we're going to see the start of significant growth and scale in the space like we haven't seen before. I mean, I think we've got a few really solid platforms out there, but I think you're going to see over the next few years scale like we haven't seen before. I don't think we've seen, like nobody's reached, when the largest car wash chain's got 500 car washes, there's a lot of room to grow, and I think we'll see evidence of it. I think you've got a lot of operators that were sort of waiting on the sidelines to sort of an exit. And again, it's just whether it's the right time in their career. They get a little bit older. They're at this point, I think they're looking at the market and saying they were waiting for multiples and the market to improve. Well, it's improving here, and the buying community can write checks again. So I think you're going to see some of these operators start to exit. And beyond that, I just look at continued growth through operation excellence. I think it's just going to be much more disciplined. Before, it was going to get big fast through M&A. Then it was going to get big fast through new builds, and that proved to be very expensive and costly. And I just think it's just going to get big through discipline going forward. But you're going to see guys moving very quickly.
Yeah, I think one thing to add to that, Jeff, which is interesting, is something we've talked about in the past, is to kind of further accelerate the growth of some of the larger platforms today. If you were to look at some of the early entrants in the car wash sector, they're all kind of approaching that 4 to 7 year window in their hold period. And the reason why that's important is we all know private equity, they typically hold investments for that 4 to 7 year time horizon, right? If you were to look at Tidal Wave with Golden Gate Capital, Spotless and Access, Imperial and Go Car Wash, Red Dog behind Mammoth. A lot of these groups are kind of breaching those outer bands, and you're kind of forced with two decisions, right? It's either you transact and exit the investment, or you throw it into a continuation fund. And I think it's going to be really interesting to see how that top 10 landscape shifts here in the next couple of years as some of these early entrants rationalize what they do with their portfolio holdings.
Yeah, but I wouldn't doubt you see some of these consolidate in the one. I just think
Yeah.
I think the most significant thing you're going to see is you're going to see, I think, high growth from the leaders in the pack. I think we're now separating the leaders from the other guys, and you're going to see a handful of groups just continue to take off and leave the rest behind. I don't see a status quo sitting there with where the space is going. I see it's just high growth with a handful of groups.
So we've seen, growth in the second half. How is it different than the first half? And where does it go, from here, leading it to the end of the year?
Yeah, so it's not a minor change. It's significant, and over the last couple of years, there has been almost a conservative, let me fill in my platform with add-on acquisitions kind of mentality. Very small deals getting done. In fact, only one deal of 100 million or more from an operator got sold in just over 2 years, and we closed that deal in December of last year. Today, we're finding right now actively much more larger size, like $100 million size deals happening, and we're finding buyers leaning in to the right platform. So if they want to be in, let's say, in the Northeast or some West Coast or some market that they really want to be in, we're finding that the sponsor community is leaning in. They're paying for what they want to buy. We didn't see that before. And the check size is, like I said before, is much bigger than it's ever been, with the ability to close and close quickly.
So with all that information, how do you see the rest of the year finishing off?
Yeah, I mean, I think we'll see several large deals closing. I mean, these are deals of 100 million or more. And I think that momentum will carry into next year. So, and again, like I said, when you have one deal that's in little over 2 years, and you'll see several closing in the next quarter. And with that momentum going into 2026, carrying on. So, super excited about where it's going. Super, it's exciting to have buyers now leaning in. It's buyers having, these are cash deals. Or, it wasn't that long ago. Everything had to be structured just to fit the credit that was available today. It feels different, because the credit's available to close on deals.
Yeah, I think looking beyond into 2026, definitely to Jeff's point, expect to see the continued momentum in this sector. But I think one thing that we're seeing anecdotally here is there's been so much just focus on the express only model, where other forms of car washing are now kind of jumping up into focus here just as a differentiator, right? And that could be flex serve, could be more of the inbound automatic sector. But I think, the market has shifted a little bit, specifically the labor market, right? Where before running a flex or full serve operation was a little more challenging, just given how tight the labor market was. As the labor market continues to loosen, you're starting to see some of the more labor intensive styles of car washing and operating come back into play here. So I definitely think as we look beyond, you could foresee a world where, there's a little bit more of a focus in how do we differentiate our menu of service offerings by having more of a hub and spoke that peppers in different styles of flex and full serve alongside an exterior only operation.
Awesome. Well, thank you guys so much for joining us, and we'll see you guys next time. Thanks for listening to Behind the Business. To catch future episodes, subscribe to our newsletter at amplifycapgroup.com/subscribe. If you found value today, leave a rating, share it, and connect with us on LinkedIn. I'm Evan Roberts. See you next time.